We do begin with stocks getting a lift off of that better than expected jobs report. Rates, as you know, are on the move. A number of sectors are as well. The Dow hits a new intraday high. John Najarian, I'm wondering now if this is a game changer for the way we need to think about the market, whether this means now rates have definitively bottomed, whether certain sectors like tech are going to be on the outs, whether the reflation trade is back in, and whether it moves up the taper. Are you thinking about those kinds of things today?
I think virtually everybody on Wall Street's thinking about those kinds of things today, Scott. Yes, is the answer to that. Because it was a great jobs report. It also was a nice revision to the June jobs report. And that had an immediate reaction like that in the bond market. And we all know that we hit 112 and change for that 10-year on Monday. And that's why we saw some of the definite compression that we saw. And since then, we've been working our way back up and moving to 127. So that tells you, Scott, that if we haven't seen the bottom on rates or the high on bonds, obviously they work in opposite directions, I think we've come very, very close to it. And could we retest again? If certain data comes in, I guess we could, Scott. But I think people are a lot more comfortable seeing that there's job creation, there's wage inflation, but not out of control. 4% wage inflation year over year. And I think workers in particular, and obviously the Biden administration, have to love that part of it.
Yeah. You know, I'm thinking of different areas of the market today, Kevin O'Leary, that are on the move. And I'm thinking of you and the banks because you've been a hater of the financial stocks. And I got Goldman Sachs hitting a new all-time high today. I've got Morgan Stanley hitting a new high today. I've got J.P. Morgan off to the races today. I wonder if the landscape has changed for you, Kevin. Time to make some money in the financials or what?
No, I have played in the financial services area. J.P. Morgan is a name that I own. It's not a heavy weighting for me because I think money center banks, return on assets are challenged. And I know the stocks have done well. A lot of sectors have done well with this amount of liquidity. But when I put new money to work now, I'm far more interested in decentralized finance. That's what's going to be disrupting these money center banks. There's a lot of capital flowing into that space. You looked at what happened just the last few weeks, $1 billion into FTX. It's private, $900 million going into Circle that brings out the stable coin, USDC. And so you ask yourself, if so much capital is going there, where's the puck going? And I think the puck is moving away from money center banks. And I've said that for a long time. I haven't been right on the stocks. I participate a little bit, but I still own plenty of financial services companies. So I'm feeling okay. But there's a change afoot. There's a lot of money going into other areas around crypto that are starting to get interesting for institutions.